Well, 2020 has had its fair share of market-moving headlines, and the election is coming up. It's right around the corner, and we know a lot of investors are wondering how should they handle their portfolios with such a big, potentially market-moving event. Well, IBD News editor Ed Carson is here to break everything down for us and help you be prepared for the election. So Ed, it's kind of a loaded question. What should people do before the election with their portfolios? But give us your take in terms of maybe what the different potential scenarios are. We can start out with that.
We already got a big October surprise with President Trump testing positive for the coronavirus. That obviously wasn't something the market was expecting, but it shows you how much uncertainty is out there, and the market doesn't like that. I mean, there's a lot of different scenarios because it's not just the presidency that's up for grabs, the U.S. Senate. And so you could see a lot of different outcomes. You could see Trump in a GOP Senate, Trump in a Dem Congress. You could see Biden with the GOP Senate, or Biden and the Democrats controlling all of Washington. A lot of different policy implications from that. The question is, to what extent, I think, for many investors, is the election not going to be a surprise? Are we going to see, is there going to be a conventional wisdom? You shouldn't necessarily trust it, but if the markets are assuming one thing, then they might price that in. If they expect Biden in a GOP Senate, then they'll probably, and we get that, the market may not react that much on election day. But if we have something that's dramatically different, like in 2016, when everybody was expecting one thing and then got the other, then you can see a dramatic change, and it won't necessarily be one direction right away. It could go whipsaw. That election night was crazy, with huge drops and then rebounding. It was all over the place. The day after the election may not be when we know who the president is. I mean, it could be if it's a close election, even if it's not super close, but if they take a week or so or two to count some of the ballots in places like Florida and Michigan, some of these battleground states, it could take quite a while. So that uncertainty, the markets never like uncertainty, especially with such stakes involved. And the other problem, of course, is that as that drags on, that gives more opportunities for both sides to, hurl accusations at each other. This isn't fair. You're not counting the votes. You're putting in fake votes. All those kind of things that can sour sentiment for the economy, for the markets, and for politics going forward. So that's just an uncertainty.
Yeah, that's right. So we don't know. Of course, we can't predict what is going to happen, but I think that is a good point to emphasize. You don't want to be making a big bet either which way, whether it's based on a poll, your gut instinct, what you want or think is going to happen. So how should investors be maybe positioning their portfolios with that in mind?
Well, I mean, just in general, you want to be in sync with the market, and that's the most important thing. And obviously, we saw with the long market rally, you wanted to be heavily invested in stocks, and they were definitely the kind of stocks that were doing well. Most stocks rise and fall with the market, and the market is going to try to price in election news as well. But so to try to guess ahead of time what you should be doing with your portfolio is really tough. The market is overwriting. The market is an overwriting factor. Hopefully, it prices it in, may not. But in specific things, you may want to just consider, don't be overly exposed maybe in sectors that you think might be vulnerable, to a particular election outcome. I mean, there's different policy things. Some stocks or sectors, they're going to say these stocks might do well under a Biden presidency. These stocks might do well with a GOP Congress. I mean, just be careful, but the others may not do well, and you just don't know how it's all going to come out. So you just generally try to don't make big bets and follow the market.
Well, let's drill down into, you mentioned sectors, let's drill down into that a little bit more. What are some of the sectors that could potentially either which way be impacted with either a re-election or a new president?
It's possible that there are healthcare changes under, say, a Democratic policies. If that comes in, that could affect health insurers. That might benefit some other medical sectors as well. But health insurers might have issues. But health insurers actually did fairly well under Obamacare. So you can't necessarily think that just because you might think that it might be negative, it might not be. Trade-related sectors are something, because obviously that is something that's been a big part of the last several years. How will chip stocks react? How will, stocks along those lines go? So those are the kind of things you want to be careful, watching for. There's all sorts of tax and regulatory issues out there that you have to be considering. What are the fiscal policy implications? Though I think both candidates, both president, the next president is probably still going to be running up big deficits. So it's not like there's going to be tight fiscal policy. But I think those are the kind of things they should be looking at for sectors and trends.
Mm-hmm. Right. And as you mentioned, a lot is going to depend on whether the market is in a correction, whether the market's under pressure or in an uptrend leading up to election day. And there's a lot that could happen between now and then beyond election-related headlines. We have vaccine news still in play. What else? What other headlines should investors be aware of that might shake things up?
We could have other kind of big news out there in the coming weeks, and it doesn't necessarily have to be about the election. Because there's so much uncertainty about the election, other news may cause a bigger moves in the market because investors are just sort of on edge right now. Right now, we're getting headlines that European countries are reimposing restrictions because the cases have really been exploding there again, and that could cool down that European economy. We've seen higher caseloads, that could see maybe we'll get more restrictions in various states. You don't know. Meanwhile, in days, we might get positive news on a coronavirus vaccine. So just on coronavirus, news could be swinging up and down the market in the next few days in either way. So those are one of the biggest things. And that has such an influence on the economy because ultimately the economy and the earnings are going to drive stocks. The market has rallied a lot this year on expectations that we will bounce back, and we have some. But that's the most important thing is like, can we get the economy back on track? And that's, much bigger impact, really, honestly, maybe than presidential policies over the few years. If you can get the economy back to healthy growth, back to its old self and back to growing beyond that, beyond anything that any one person will be doing in the White House.
Right. And I think, no matter the outcome, investors are concerned about what if there is a really big negative reaction. What do I do with my stocks? And a lot of that, in addition to the overall market conditions, comes down to your individual holdings and following sell rules.
Yeah, we always talk about you want to try to keep your losses short. Like if you're holding, some comfortable gains and some solid stocks going into election, let's say the market goes down a couple percentage points. So you're just not going to be that bothered. But if if the market goes down 3% and all of a sudden stocks that were at break even are now down 5-6%, and then you have to start making really hard decisions, maybe they'll bounce right back, but you don't know if you're going to be a real trend. So, that's just a scenario that you want to make sure that, you generally, maybe holding onto your leaders, keeping your rules, your buy and sell rules sound, your portfolio in sync with the market. And if you do that, you're probably going to do fine, after this election.
Yeah. And it's kind of like how we treat stocks heading into earnings. We like having enough cushion heading into the report. If you're break even, as you said, or even down a little bit, stocks can move big either which way on their earnings reports, that reaction. And this is essentially, an earnings report for your entire portfolio.
Yeah, that's a great way to put it. It's a great earnings for the entire stock market. So,
yeah,
if you think about that, if you had earnings report on all your stocks in one day, that'd be a pretty wild day. So I understand why people are asking about what should I do with my stocks coming up, because it is a huge day. But it's probably not going to be that kind of gyrations that you might see on earnings. But so that's why you just want to keep all those kind of conditions in mind going into election day. It could be a quick night. It could be a couple of weeks or months before we find out who the president is. That would be the nightmare scenario. So, we'll just have to see as we come into toward the election, how, if that's what likelihood that is.
That's right. And we are going to be prepared for changing market conditions and that battle plan that you need right there leading up and right after and onward. So we're breaking everything down in all of our content across Investors Business Daily and investors.com and IBD Live as well. So we hope you check that out. And Ed, you are a big part of IBD Live, and we really appreciate your insights today.
Thank you very much.
Hi there. Thanks so much for watching Investing Strategies on our YouTube channel. If you want more executive interviews and analysis of key trends to watch, make sure you hit the subscribe button so you can stay up to date.